Despite reporting a 13% decline in sales from a year ago, Tesla shares surged on Wednesday, and it could have something to do with the report that Elon Musk will soon leave his role in the Trump administration to focus on the electric vehicle company once again. Joining us now to talk about all this, Stephen Gengaro, Stifel NextGen transport analyst. Stephen, it's always great to see you and have you on the show. Let's start with this report, Stephen, that Trump is telling his inner circle Musk will soon leave. I'm curious what you make of that, Stephen. You know, we did have Dan Ives from Wedbush on the show recently. I'll tell you, Stephen, this is what Ives has been pounding the table on. He's telling me, this is what I want. I want Musk out of politics. I want him back focusing on his businesses. Is that what you want to see, Stephen?
Yeah, I would agree. And Josh, it's good to see you as well. Clearly you've seen the hate, right? I mean, you've seen all over the news what's going on at Tesla dealerships, people burning cars, et cetera. And Elon's involvement in the government is largely driving that hatred towards the company. So I do believe, from a Tesla perspective, he would clearly be better off going back, running Tesla, and stepping away from his role on the government side.
Yes, Stephen, question. I see the valuations. I see your note. Is there a way to price in reputational damage into a stock like this? We know this stock has been through so much if you just look over the past several years, but is there a way to price that in, or you just have to look at unit sales, at fundamentals, and what the prospects for growth look like?
Yeah, it's a very good question. So when we thought about the first quarter delivery numbers, and we lowered our number to about 353,000 deliveries in the first quarter. Part of that was the backlash around Elon. Part of that was just the Model Y switchover of production, which is the best-selling vehicle in the world, and that clearly was going to have an impact. As far as trying to look at the impact of, on sales, on valuation, I think it's really hard to kind of compartmentalize the specific valuation impact. Now, you obviously saw volatility in the stock around it. We have a group at Stifel, a Stifel think tank group that does outstanding work on data analytics, and we've published some reports which have shown, the significant drop off in favorability ratings and net purchase considerations by Democrats on Teslas, and that's clearly matters because there's more Democrats buy EVs than Republicans at this point. And we saw this massive shift. All of a sudden, Republicans love Tesla and Democrats hate Tesla. So, all of that probably gets reflected in the stock to some extent, but to really kind of compartmentalize it down on a valuation number is very difficult.
Well, to that point, Stephen, I think what you've just described is just how hard it is to quantify that key man risk. And so part of the upside performance today, might that have more to do with kind of the business? There's actually a nice event going on in Saudi Arabia next week, a new market for Tesla. Might that have something to do with the uptick in the stock today?
Yeah, I think first, as far as today is concerned, I think that the stock wasn't as weak at the open as people would have thought from the headline number, right? Some of the consensus numbers were stale. Some of it was people were expecting that the first quarter was going to be soft. And just kind of fundamentally, I don't think things were as bad as maybe some people had feared. So I think that was part of the reason the stock wasn't as weak at the open. And then just with the news that he may be stepping away from his government role, that was obviously a catalyst, because when that news hit, the stock obviously popped on that. From a fundamental perspective, the other part of the story which jumped out today was the Model 3 and Y sales, albeit on depressed expectations, but the Model 3 and Y, which is really the bread and butter of the company, those sales were exactly in line with their expectations, actually even slightly better. It was the S and the X and the Cybertruck, which really were the pieces that missed. And I think that's probably less important because they're much, much lower volume than the Y and the 3 are at this point.
Stephen, they're scheduled to report results. Let me make sure I got the date right here. April 22nd. What do you expect to hear then, Stephen?
Yeah, I think, Josh, one of the things to watch for is in the last quarter, they had their best quarter ever of cost of goods sold per vehicle sold, right? So I think when you look at the cost structure and then ultimately that translates to sort of profitability per vehicle, I think that's number one, is just to watch that number. It could be a little bit muddy this quarter because of the switch over on the manufacturing lines to the new Model Y, but that's one thing to watch. I think the other thing to watch is just kind of their commentary on what they're seeing right now on kind of a rebound in sales, post this kind of manufacturing production line shutdown, and how things are sort of coming out of the first quarter. And we're still looking for modest growth in volumes in 2025. Others are looking for flat to down. So I think color around that is going to be something to really be focused on. And then the other big piece, and when you look at our valuation, I mean, we've said this many times. I mean, selling cars is obviously a big part of the business, but the unsupervised full self-driving and the path to that, any data points we get around that would clearly be a positive. And then you couple that with the robo-taxi initiative, which really is underpinned by full self-driving. I mean, those are the big things that we're watching for.
Steve, I saw some interesting commentary from a longtime tech analyst and a Tesla bull, Gene Munster on X. Smart guy like yourself, Stephen. Here's what he posted. I just want to get your take on this. He said, "I believe this too shall pass. Over the course of the year," he said, "I expect consumers will move past Elon's political involvement and refocus on the broader benefits of electrification," which he spelled out here. He said that's Tesla's clear advantages: industry-leading range per dollar, superior software, and full self-driving. Tesla, he says, continues to offer the best bang for the EV buck. That was Gene Munster. Curious, Stephen, to get your response, your reaction when you hear that comment.
Yeah, I'll be a little bit careful on the political side, but what I will say is that when you look at the data, it shows that Democrats are more likely to buy EVs than Republicans, and that kind of clearly has faded away near term. When you look at the vehicle, I mean, basically Elon Musk helped pioneer the electric vehicle business, right? So I think when you get by the dark cloud of his political engagements, you will go back to that point. I would agree with that commentary, right? You will go back to, it is the best bang for your buck on an EV perspective in the U.S. market right now, right? The range is very good. It's and I think on $1 per range, it's a nice way to put it, because they do a really good job of delivering high range, outstanding charging infrastructure, and solid vehicles. And the new Model Y and the new Model 3, which came out probably 9 months ago, they are step changes in the actual quality of the vehicle, the interior, the ride quality. So I would agree with that. And as people refocus on those fundamentals, and then it leads again into the FSD, the full self-driving side, those are the big keys to the stock. We consistently tell people there's a high retail ownership. The stock's going to be volatile. But the reality is we think there's significant upside to the stock over the next 12 to 15 months.
Stephen, always great to see you. Always great to have you on the show. Thank you, sir.
Yeah, thank you.